Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all my own original work, as I think you deserve to have that. So with that, ice raw sugar in New York. The main pattern here since September 2024 had been, and I suppose still is, after a fashion of sorts, is the breached and seemingly repaired dark blue September to December 2024 bear channel. And that's currently 1438 to 1804. However, since February, the bright pink late September 24 to mid-January 2025 bearish Andrews pitchfork, which I drew 19 weeks ago, is a better contender in showing the bearish angle of attack. And on this one, we are today just below the upper tine above, currently at 1701, after testing and rejecting it last Friday. There's also a large pattern complementing the other bearish patterns, a longer term bright red November 23 to September 24 bearish shift pitchfork, which has even now also been pretty good at showing the bearish angle of attack over a longer time frame. On this one, we are today just above the bright red middle tine, which is currently at 1672, after piercing it late last week. The bright red middle tine, along with the bright pink middle tine, currently at 1445, had between them helped hold up the market on a number of past occasions, even though they are actually bearish patterns. Going back to the more immediate action, we had a really interesting drop 3 Mondays ago below the pink middle tine and the dark blue lower trend line, though no doubt both these eroded the bearish incentive, but it was the March 2021 low at 1467 that finally halted the decline and turned prices back up again, up to where we are now. In the process of doing all this, the market created a weekly key reversal up 3 weeks ago. The first weekly key reversal up since at least 2018. Thus, prices have once more up and challenging the bright red middle tine and bright pink upper tine, as well as the green short medium moving average. So, is this a long anticipated, by some at least, long anticipated bullish turn higher from all the bearishness we have seen here since late February? At the moment, I'd say, like I said last week, no. It is a recovery, a small one so far, from a massively overt bearish market. And the weekly key reversal up 3 weeks ago is an interesting indicator to start watching out for signs that this may be more than just that. But for now, it is a pullback in an otherwise still bearish market. We need much more than what we've had so far to justify any such change to the bullish in this market's aspects. Ice Europe white sugar in London. After all this time, there still continues to be 3 features of this market to continue to bear in mind on this daily chart. The first of the 3 patterns is the obvious and broken, though now back to being repaired, if only just, purple late September 24 to mid-February 2025 descending expanding wedge pattern, which is currently 484.90 to way off the bottom of my daily chart. This pattern had more than the requisite 5+ touches necessary made back in January this year, and had been severely tested on the top side between late February to mid-April, though enough that it would not necessarily classify as a descending wedge pattern after February, though I'm still keeping an eye on the extension to the upper trend line, as I believe it to be significant. After the break higher seen between February and March, on the way lower, I asked you 14 weeks ago to, and I quote, also keep an eye on the bright pink late September 24 to mid-March 25 recently finessed bearish shift pitchfork. This is a very shallow pitchfork, and the more the market moves through it, the more I'm beginning to like it. End of quote. Well, since then the market started utilizing the bright pink middle tine first as an attractor, riding prices lower in a shallow glide until 8 weeks ago when the market broke free on the downside, but still riding near to the middle tine. The last weeks have seen attempts higher that have so far seemingly failed, getting caught up in the well-highlighted overhead congestion between 489 even to 490.10. It's quite narrow. and then the bright green extension to the April to June 2021 head and shoulders neckline, which is currently 491.90. And finally by the arching approach lower to the mauve medium moving average, currently 501.60. The results of all this was an outside week 2 weeks ago, and another last week. Not as powerful as the weekly key reversal up seen in New York Sugar, or indeed seen here 5 weeks ago, but these are still there nevertheless. What it seems to come down to now is whether the market has the bullish incentive to push up over the pink middle line, the purple upper trend line, and the bright green neckline extension. Right now, like last week, it doesn't look like it might. However, there is still one set up open for an incomplete pattern. We're set up with just under 2 weeks of July to go for a potential monthly key reversal for July. Thus, if we close in July on the 31st of July, either over 476.10 or under 472.90, then we'd be on. Anything in between, it would have a lesser outside month pattern. Right now, we've been tinkering between a possible outside month or a monthly key reversal up, and we're actually moving now more towards a outside month. Sugar white premium spread. Some interesting recent gyrations here. 14 weeks ago, we had a weekly key reversal down as the market made a new peak at the time. But that week, the market pulled back down as well, with a weekly key reversal down as well at the same time, and we continued lower until the combined bull hammer pattern and bullish engulfing pattern 7 weeks ago. Prices had closed fully below the declining gold long moving average, and that's currently at 101 even. And this full attempted move below the gold long moving average seems to have prompted the market to turn back up. Plus it was also a third touch and pull back up from the dark blue November 2024 today uptrend. It's currently 108 even. The pullback up turned into a fresh move higher through the twin pair of overhead 50% Fibonacci lines at 128 3/4 and 131 1/4 for the July 2019 to September 22 move and the August 21 to September 22 move, respectively. And congestion at 134 1/4 and into a fairly free area overhead, which it duly exploited 3 weeks ago to new recent highs. But it ran into the significant 2013 high at 152 3/4 and swiftly turned back down, just as it did back in mid-April, and made a combined weekly key reversal down and bearish engulfing pattern 3 weeks ago. 2 weeks ago, we had a very indecisive long-legged doji cross, and last week we had another indecisive pattern, this time a weekly indecisive spinning top. However, in the formation of this pattern, prices tested lower, down through the dark blue uptrend, down through the gold long moving average, and down to lows last seen 7 and 8 weeks ago, before retreating higher once more. Now, as I said last week, and I quote, "You could have an argument that the whole action from April and possibly even from November last year could be a possible bull channel, a quite wide one, and I would see your point. However, I'm not ready, not just yet, to call it so, at least not just yet, though I may change my mind by next week," end of quote. I'm glad I said that, as though we've pulled higher to finish off last week, we are again lower when compared to Friday's close, and I suspect all three, the dark blue uptrend and the flatlining gold long moving average and the recent lows, may be coming back to be under test again. This now also threatens the idea I spoke about last week of a possible late January to early June bullish shift pitchfork. I have not retired this as yet, but this, along with the breached dark blue uptrend, may soon fall into the frame if they are not careful.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.